speculative analysis that we've been reading about appears to be somewhat misplaced.
The Finance Minister plays down fears of a deficient rainfall this year, says speculation over the Met Department's forecast is misplaced, asserts that impact on food production will not be significant.
Global jitters rocked the Lal Street, but markets stage a dramatic recovery in late trade. Nifty defends 8100, wipes out losses of nearly 70 points to end flat.
Volatility grips equities and bonds across global markets. Shares recoup losses after a sharp fall. Yields surge a day after the ECB president warned of more volatility. Drama in Greece 24 hours ahead of the loan payment deadline also plays spoil sport. The IMF asked the US Fed to delay its rate hikes to the first half of next year.
Tata Steel's European operations could be thrown out of gear. 96% of the company's UK employees vote to go on a strike, demanding higher pensions. The stock tumbles in trade as Europe accounts for 60% of the company's revenues. British Prime Minister David Cameron steps in to resolve the crisis. That's a CNBC TV18 exclusive.
Tamil Nadu, Jammu Kashmir, Gujarat and Uttarakhand joined the Delhi ban to impose a temporary ban on Maggi noodles. The Central Food Safety Regulator finds fault with reports from several states. Nestle claims independent testing by third-party labs proved the product is safe.
The government announces August 11 to 17th as the dates for the third round of coal block auctions. 10 mines will be up for grabs for unregulated sectors like steel, cement and others.
The tug of war between the centre and states over the goods and services tax continues. States demand full upfront compensation against the centre's plan of staggered payment. Also seek to levy additional sales tax on tobacco. No decision yet on the revenue neutral rate.
20 soldiers of the Indian Army are dead and 11 injured in Manipur as militants ambush a convoy of the Dogra regiment. It's one of the most deadliest attacks on the army in about 2 decades.
Luxury housing in Chennai takes flight. Realtors are buying defunct factories, mills, industrial land, you name it, and turning them into luxury apartments. A special Up South report when we return.
And Tata Motors is trying to leverage its 5-decade-old relationship with the Indian Army, hopes to transform itself into a combat vehicle manufacturer by ramping up capabilities. A special report on the show.
Look, it's a really exciting car for us. I think, firstly, it's another performance car in our stable. 560 horsepower, 700 newton meters of torque, 0 to 100 in 3.9 seconds. But more importantly, it's a totally new body style. I believe it's got a real future in the country. There's lots of cars in our portfolio that come in this, and we're really looking forward to the future of this body style as well. A car for the self-driven. It's a car that you want to drive every single day.
While the slew of new car launches continue, Audi launched its first station wagon in India today. The RS6 Avant will cost you a cool 1.3 crore rupees. Good evening. Thanks very much for joining us on India Business Hour. Nentara, are you buying the new Audi?
You decide my salary. I'll let you answer that.
Well, I think you can dream about it for now. All right, straight to what was a roller coaster ride on the Lal Street. Market saw some sharp cuts post-lunch when news from Europe and Greece rattled investors, but a dramatic pullback that we saw in late trade saved the day. The Nifty slipped below the 8,100 mark, but recouped almost all of those losses, ending the day marginally in the red. Ditto for the Sensex. It ended with losses down about 23 points, and you can see that U-shaped recovery on your screens. Mid-caps not far behind, with the mid-cap index ending barely in the red. Now, Finance Minister Arun Jaitley says he's not too perturbed about the recent turmoil, volatility, sell-off, correction, call it what you like, in the Indian equity markets. He says the recent blip will not throw the government's disinvestment plans off track. Listen in.
I don't read too much on daily movements as far as markets are concerned. By and large, with the health of the economy recovering, I see much greater stability as far as the markets are concerned. And therefore, the divestment program of the government will continue as it has been planned.
That's Arun Jaitley talking about the divestment program not being thrown off track. Now, one crucial trigger for the recent fall in the markets, especially since Tuesday, has been the Met Department downgrading its monsoon forecasted deficient. Today, the Finance Minister tried to allay those fears after meeting with officials of the IMD yesterday. In fact, in a categorical statement, Jaitley called the speculative analysis as misplaced. He went on to say that the only one region would receive scanty rainfall, that's the northwest, and would not impact agriculture output in any significant manner.
Kind of speculation that we've been seeing and the speculative analysis that we've been reading about appears to be somewhat misplaced. What is extremely relevant is the geographical distribution of the monsoon. Also relevant is the timing at which it takes place. The slight inadequacy, if at all, is in northwest. And a large part of northwest has substantial irrigation facilities also. Assuming that the advanced predictions are correct, on account of this geographical distribution, the impact on food grain production may not be very significant.
Well, that's the Finance Minister saying there's a slight inadequacy. Remember, the Met Department says it's going to be a deficient monsoon. You now have the Finance Minister saying after his meeting with the Met officials yesterday, he believes that there's only going to be a slight inadequacy in one part of India, which is the northwest region. And of course, SkyMet continues to forecast a normal monsoon. To take us through this confusion, joining us now is DS Pai, Director Long Range Forecast of the Indian Met Department. Mr. Pai, good to have you back on the show. Please explain this confusion to us. You have downgraded very recently your forecast, saying that India will see a deficient monsoon. The Finance Minister says he was given an hour-long briefing by the Met Department yesterday, that's the 3rd of June, and today he says that there's only going to be a slight inadequacy in one part of India, that's the northwest region. What do we make of this?
See, as per our forecast, you can see that for central India, it is 90%. Northeast India 90% and South Peninsula 92. All these values are one standard deviation of rainfall of this region. Generally, statistically, one standard is taken as a normal. So that is how it was interpreted. There is the lower efficiency was for Northwest India, which is 15%, slightly more than one standard deviation. So when you interpret that, it becomes a highest deficiency over the Northwest India.
Okay, are you maintaining your forecast or has there been another change as far as your forecast is concerned? Because if I look at your weather bulletin put out this evening, you're saying that rainfall activity over Kerala has increased. The conditions continue to be favorable for the onset of the southwest monsoon over Kerala over the next 48 hours. Is there any reason at this point in time, any indication that perhaps you could be moving more towards a slight inadequacy, as the Finance Minister has called it, instead of a deficiency in the northwest region?
See, whatever that we have given today's bulletin, it is regarding the onset of the Kerala. And Kerala, as you know, we were expecting that to happen on 30th, but since monsoon was not strengthening, we will now after 2 days we are seeing monsoons over Arabian Sea are strengthened, and there is a possibility of a low pressure system forms during the next hours, and they are also likely to strengthen, and as a result we are expecting rainfall activity, so which happens generally associated with the onset of the Kerala. We are expecting this activity to continue next 2 or 3 days, and then slightly weaker and for a few days.
So the onset of the monsoon over Kerala, at least another 3 days, is that what you're saying?
No. Within the next 40 days, onset will take place. And after onset, good rainfall activity at least 2 or 3 days, and there will be slight weakening of that.
Okay, so onset over the next 48 hours is what you're saying. Very quickly, my last question to you before I let you go. Once again, I harp on that point because you're saying northwest region will be deficient. The finance minister is saying it's a slight inadequacy. A slight inadequacy doesn't seem to be in the same vicinity as deficiency.
See, the deficiency, like last year, there was rainfall over Northwest India was 79%. Whereas this time, as our prediction, they are all distributed equally in all regions. So that also within the just 1 standard deviation less over the Northwest.
All right, Mr. Pai, we'll have to leave it there. Appreciate you joining us with the latest, and that's the forecast, 48 hours, the onset of the monsoon over Kerala. But let's talk about global markets. Equity markets in China today witnessed extreme volatility amid signs that brokers in the country were clamping down on margin financing, while other bourses in the region traded mixed. Let's go across to Sri Jagaraja. He joins us with the update. Sri, what a volatile day it was for China today.
Wild ride for China stocks this Thursday. Shanghai Composite sank by more than 5% in the afternoon session. Buyers jumped back in, helping the index close 0.8% higher. Choppy session came just 1 week, remember, after the market plunged more than 6% and underscored just how very sensitive this market is to news of brokerages or the regulators clamping down on margin debt. In other words, buying stocks on credit, and that, remember, has fueled that 120% plus rally on mainland equities. Hong Kong also getting caught in the downdraft, and sentiment was rattled in Taiwan as well, with the TAIEX benchmark dropping to 5-month lows during the session. Australian shares fell to a fresh 4-month low as weak retail sales and trade data stoked concerns about the economy. That is your Asia Market Minute. I'm Sri Jagaraja in Singapore.
That's a wrap up all the action in the Asian equity markets. Let's head across to Europe. Now the European market seeing wild moves today. That's after a steep fall in bond prices, and that's following ECB President Mario Draghi's comments from yesterday, saying markets should brace up for further bond market volatility. That prompted traders to pile out of bonds, pushing prices down and driving up yields. So the German 10-year bond, that will come up for you on your screen, so how you can see how it's trading at 0.96% at the moment. The German DAX lost more than 1% before recovering only marginally to end down by more than 50 points. You'll see the frontline indices for you. The French CAC, meanwhile, down by about 47 points. The British FTSE also not having a good day. That's down by about 92 points or 1.31%. But all the action today and what everybody's watching out for is the Greek Athens Composite. That's also been under pressure. The country needs to make its loan payment by tomorrow. And now new deal has been struck. As yet, do remember, Greece has rejected one that had been offered by the creditors about 24 hours ago. And all of that drama in Europe, particularly Greece, having an impact on Wall Street as well. We have seen shares stuck in a tight range. The frontline indices will come up for you. It's the same story playing out at the moment. The Dow down by about 113 points. The S&P 500, meanwhile, down by about 0.6%. But we're not done with global stories yet.
No, we're not. And this is the news coming in from the International Monetary Fund. The IMF has called on the U.S. Federal Reserve to delay its proposed rate hike. The IMF has cut the growth forecast for the U.S. in 2015 from 3.1% earlier to 2.5%. The fund has also called on the Fed to delay its rate hike till the first half of 2016. IMF believes the U.S. needs to see tangible signs of wage and price gains before pushing ahead with its rate hikes. Here's the Managing Director of the IMF, Christine Lagarde, on the outlook for the U.S.
We have revised our growth forecast down to 2.5% in 2015. This is largely due to those factors that affected the first quarter. But this is not our main message. We still believe that the underpinnings for a continued expansion are in place.
Well, that's the IMF view on the US economy, and of course all eyes are going to be on whether or not we can see a new deal being arrived or brokered as far as Greece is concerned. Now, from the US to the UK, it's not only the biggest employee action in the UK steel sector in the last 3 decades, it can significantly hit Tata Steel's European operations that contribute 60% of total volumes for the steel major. Sources say 96% of the members in trade unions have voted in favour of a strike in the long-standing dispute between Tata Steel and UK trade unions about a proposal to change the company's pension scheme. But it's not the end of the road just yet. Kritika standing by with the details. Kritika, is the strike final, or does Tata Steel have time to respond?
Well, a quick background first. Tata Steel had proposed to replace the old British Steel pension scheme with a new pension scheme, which has faced widespread protest amongst labour unions. In fact, this tussle has been going on since November of last year. So for now, we understand that 4 trade unions have gotten involved. In fact, there was a large ballot that had taken place earlier, in which around 85% of the total 17,000 members that are a part of the trade unions were present, and 96% have voted in favour of a strike. So that almost makes in about 3 out of those 4 unions, and the 4th union is also likely to vote in favour of the strike. Now, what happens going ahead, and what does this mean for Tata Steel? The trade unions will be submitting a formal notice to Tata Steel on Monday. So 8th of June, we should get some clarity on what the road ahead is. Tata Steel will have a week to respond. If at all Tata Steel agrees to the labour union's claims, we will probably see some kind of relief coming in for Tata Steel. But if they do not, then by the 15th or 16th of June, the unions will go ahead with a strike. What does this mean? 60% of revenues coming into Tata Steel in terms of volumes come from Europe. And the UK operations, if you take Europe alone, then UK operation makes around 60% of that revenue. So that will get a significant hit, and instantly over the next 4 quarters, Tata Steel will not be able to make up for the disruption in the operations, which will happen if at all a strike does go through.
Thanks, Kritika, for joining us with those exclusive details. Tata Steel was down by about 3.5% in trade today. Meanwhile, the UK government has intervened in the matter. Today, David Cameron made a statement in Parliament on the importance of resolving the deadlock amicably. Cameron, however, added, and I quote, "It is very important that government talks intensively to the leaders of the steel industry, Tata in particular, about what we can do to try and safeguard the jobs and the growth that there have been in the steel industry over previous years." End quote.
Well, that's David Cameron getting into the ongoing dispute between Tata Steel and workers' unions. Back home to the Maggi fiasco. Tests done by some states on Maggi noodles are inappropriate, and that's the word coming in from the Central Food Safety Regulator, or the FSSAI, as it ordered retesting and a pan-India assessment on whether the instant noodles are fit for consumption. Priya Sheth gets you the latest twists in the Maggi story.
Instant noodles, but no instant end to the nationwide controversy that rages over Nestlé's Maggi. After a meeting with state food regulators, the Food Safety and Standards Authority of India today did some plain speak in an attempt to untangle the Maggi mess.
देखिए, 2 जगह की वैलिड रिपोर्ट्स आ चुकी हैं, दिल्ली और केरला की। बाकी जो रिपोर्ट्स आई उनमें खामियां थी। उन फूड सेफ्टी कमिश्नर्स को ये रिक्वेस्ट की गई है कि वो प्रॉपर रिपोर्ट्स बनवा के हमें भेजें। उसमें 2-3 दिन लगे।
So as things stand, the Central Food Safety Regulator awaits test reports from all states. It will then take a call on the regulatory action required. Meanwhile, states continue to take their own steps in response to the possibility of high lead and monosodium glutamate levels in Maggi noodles. Jammu and Kashmir and Gujarat today announced a 30-day ban on Maggi, while Tamil Nadu and Uttarakhand have imposed a 90-day ban on the instant noodles. This takes the total number of states having banned Maggi to 5, with Delhi taking the lead yesterday. But Nestlé India is not without its supporters. Some FMCG industry veterans question the veracity of these state-level tests, especially given that some states have given the product a clean chit, while others have not. And the controversy has hurt what is easily Nestlé India's most popular brand.
Obviously, the testing process in India is disastrous. I mean, you have destroyed a brand before getting any conclusive evidence. I am rising to the defense of Nestlé only on the ground that unless proven guilty, it takes hundreds of years to build a brand. Everybody in India has destroyed it in one day. And that's the most unfortunate part. Forget about the cost. If they were to sue the government of India, and they are right, then where will the money? Will the government of India give them the money that is being that they would have lost as a consequence of bad testing? Or are we not bothered?
The nationwide controversy has stung Nestle India into damage control mode. The company has uploaded FAQs on its website in an attempt to address health concerns. It claims a total of 1,600 product batches have been tested in internal and independent labs and have all cleared safety standards. Claims that do not seem to be holding much water at the moment with consumers as well as investors. In Mumbai with Priya Sheth, Ritu Singh.
It seems like Maggie's in a thicker soup today. After successfully auctioning 29 mines, the government is gearing up for the third round of the coal auctions with 10 coal mines up for grabs, but only for the unregulated sector. The Coal Ministry is also expediting the policy on coal linkage auctions and will seek public comments before finalizing the details. Here's a story.
After a month's delay to announce the third phase of coal mines auction, the Coal Ministry today said bid documents will be out from June 8th and the auction will be conducted between 11th to 17th August. 10 mines specifically meant for the use of the unregulated sectors like cement and steel will be up for auction.
The change that we are bringing about in the current auction is only with regard to the multiple bids by a single company. There we have worked out a formulation so as to ensure competition in the bidding process. There are 10 blocks and all of them have most of the clearances. In the Schedule 2 blocks, I think mining should start within 2 months of auction. In Schedule 3, it may take about a year time before the mining starts.
The Coal Ministry has floated the draft proposal for the auction of coal linkages to the unregulated sector. The Interministerial Committee in its last meeting had decided to use the supplier-controlled ascending market clearing approach. The methodology is similar to spectrum auction and government intends to auction linkage afresh from August 2016.
We felt that there has to be similar transparency as has been in the case of block auctions for allocation of linkages. And the two primary questions that we are attempting to answer, as we did in case of blocks, is that who should get it and at what price should they get it, and both to be determined transparently. So what we've done is that we have come up with a system called supply-controlled ascending market clearance auction.
While the focus is clearly on meeting the coal requirements of the unregulated sector, the timing of the coal linkage auction will be watched carefully. In New Delhi with Anshu Sharma, Nayantara Rai.
While state finance ministers gathered in Delhi today to thrash out the differences over the goods and services tax bill, sources say about 15 states are completely on board and the panel will submit its views to the Rajya Sabha Select Panel shortly. However, states like Punjab, Maharashtra, Haryana, Goa, Kerala and Tamil Nadu still have a few demands to keep select items out of the GST ambit. Tamil Nadu is also not on board just yet. Amidst this backdrop, the GST panel head K. Mani spoke exclusively to CNBC TV 18 Sapna Das. He said all states are not fully on board and compensation continues to be a flashpoint. Listen in.
The stand taken by the central government is that the compensation for the first 3 years, it will be paid in a phased manner. Compensation will be paid in a phased manner. Yeah. For example, for the first 3 years, full compensation, 4th year 75%, and the 5th year 50%, etc. Right. In such a way. Right. But states demand that the full compensation should be given for 5 years.
So all states have asked this, or only few states? How many of them have asked?
By and large, all states.
Also, sir, the issue of levying additional tax on tobacco, would that really be a concern? Because in any case, that freedom is already there, not for the centre, and I suppose the same will also pan out for states.
No decision has been taken. Certain states have demanded that over and above the GST, they should be allowed to levy an additional sale tax over tobacco also.
So there should not be any problem in that. That power
These issues all have to be thrashed out, and we have to take decision over that. Then we will take a decision finally.
So also on the 1% additional tax, consuming states have raised serious concerns on that. So are you going to communicate the discomfort of the consuming states to the select panel? Because that again could be a serious matter for the centre and for the select panel.
All the apprehensions and views of the states will be transmitted, will be communicated.
And K. Mani confident that the goods and services tax will roll out by the 1st of April 2016. Markets may be volatile now, but over the last 1 year, Indian equities have been on a firm footing. And that has seen retail investors choosing the mutual fund route to park money in shares. CNBC TV 18 Sajid Mangat and Parabukwala Vora report that a sharp 83% jump in assets under management has led to an expansion of the markets.
The walk down Dalal Street has become more interesting and profitable over the last 1 year, and mutual fund equity schemes, it seems, have become the preferred mode of investment. In the 12 months ending April 2015, retail assets under management in equity mutual fund schemes have risen a whopping 83% to 3.5 lakh crore rupees. Now, a lot of this extra money has not gone into the top 10 fund houses as one would normally expect. So the share of these 10 mutual funds fell from 52% as of April 2014 to 44.6% as of April 2015. However, the leading fund houses have definitely benefited from the increased inflow of funds. According to Prime database, HDFC remains at the top in terms of retail money in equity, but its AUMs rose just 45% over the period. This is considerably lower than Reliance Mutual Fund, which though at number 4 in terms of total AUMs, saw a 119% jump. The other players, UTI, ICICI Prudential and SBI, have also seen a healthy rise in AUMs. It is also interesting to note that southern and northeastern states have seen more investors choosing to invest in mutual funds. Maharashtra still leads among the states by accounting for 35% of the total equity AUM corpus. This incidentally is more than the next 5 states put together. That's Delhi, Karnataka, Gujarat, West Bengal and Uttar Pradesh. But the 4 southern states, that's Andhra Pradesh including Telangana, Tamil Nadu, Kerala and Karnataka together account for nearly 18% of total retail AUMs. That's an average growth of 79.43% from levels seen 12 months ago. This is significant if you account for the fact that these states make up less than 5% of the trading volumes in the equity markets. Likewise, the 7 sister states in Northeast India have seen their retail AUM surge 70% in the last 12 months, taking their overall share of total AUMs to 6%. But here's the slightly worrying bit of data. Prime database says that nearly 7% of the assets under management in equity schemes do not meet KYC norms. That's over 23,118 crore rupees, which has been classified in the others category, with fund houses saying they are unable to even determine which city or state these investments originated from. More alarming is the fact that this number is 80% higher than what it was a year ago. We must also remember that these equity schemes only account for 26% of the mutual fund industry's 11 lakh crore rupee corpus. Also, the number of retail accounts has fallen to 4.1 crores from the 4.8 crores seen in September 2009. So the mutual fund industry has miles to go before it can rest on its laurels. In Mumbai with Sajid Mangat, Farah Bukwala Vora.
Well, with that, it's time for us to wrap up this edition of India Business Hour. Will our markets see a pullback tomorrow? Well, those are the questions that we'll answer right here on CNBC TV 18. Till then, from the entire team, goodbye. Many thanks for watching.